back to Prime Wealth. We're so glad you could join us today.
Yeah, it's great to have you here. I'm Alex, your friendly financial advisor.
And I'm Jordan, your host. Today we're diving into a really hot topic. Something that's buzzing in the financial world right now. Crypto.
Right. So we're asking the big question today. Crypto for beginners, is it worth it?
Yeah, it's a question that a lot of folks over 40 are wondering about. With all the hype and headlines, it can be super confusing, right?
Exactly, and we want to break it down for you. We'll cover what crypto really is, why it seems to be everywhere, and whether it's something you should consider adding to your financial strategy.
And we'll also talk about some of the risks involved, because, it's not all rainbows and sunshine.
Absolutely, and we'll share some practical tips on how to start if you decide it's for you, or, if you feel it's not the right fit.
So whether you're just curious or thinking about dipping your toes in, we've got you covered.
Yeah, let's get right into it. Ready to explore this world of crypto, Jordan?
I sure am. Let's jump in. So Alex, let's dive into why crypto is such a hot topic right now, especially for folks over 40. It seems like every time you turn on the news, there's something about Bitcoin or Ethereum, right?
Yeah, absolutely, Jordan. It's everywhere these days. And it's not just a trend. People in their 40s and beyond are really starting to take notice.
Totally. I read somewhere that over 40% of people aged 40 and up are considering investing in crypto. That's a pretty significant number, don't you think?
Definitely. And it makes sense when you think about it. Many of them are at a stage in life where they're looking for ways to grow their retirement savings or diversify their investments.
Exactly. And I can imagine it feels a bit overwhelming. There's a lot of jargon, and it's all moving so fast.
Right. You hear terms like blockchain and decentralized finance, and it can sound like a whole different language. But it's essential to break it down into simple concepts.
Yeah, and for people over 40, it's not just about the money, right? It can feel like a lifeline, especially if they're worried about their retirement savings.
Exactly. Many people in that age group are still recovering from the 2008 financial crisis. They've seen how quickly things can change, and they want to make sure they're not caught off guard again.
That's such a good point. And I think there's also this emotional component. Some folks might feel a bit left behind if they're not in on the latest trends.
Absolutely. It can be tough to watch younger generations seemingly thrive while you're trying to figure out how to catch up.
Right. And, I heard this story about a woman in her early 50s. She had been saving for retirement all her life, but with inflation and rising costs, she felt like her savings were just dwindling.
That's a common concern. And it's why many are looking for alternatives like crypto. They want to find that potential for growth, but they also need to be careful.
For sure. It's like walking a tightrope, balancing the desire for higher returns while also managing risks.
Exactly. And let's not forget that many people over 40 might be looking to leave a legacy for their children or grandchildren. They want to invest in something that could potentially grow and pass it down.
Yeah, that's a really touching motivation. Thinking about the future and wanting to provide for loved ones is such a strong driver.
Definitely. And, there's been this recent trend with companies like PayPal and Square allowing users to buy and sell crypto. It's becoming more accessible.
Right, and I think that really lowers the barrier for entry. But do you think the volatility of crypto is still a big concern for people in this age group?
For sure. Volatility can be scary, especially if you're closer to retirement. You don't want to risk your nest egg on something that could drop in value overnight.
Yeah, I can see why that would make someone hesitant. It's one thing to invest in stocks, which have a long history, but crypto is still so new.
Exactly. And that uncertainty can lead to anxiety, but it's also an opportunity to learn and adapt. And that's where practical education comes in.
Oh, definitely. I think it's crucial for people over 40 to really understand what they're getting into. What drives the value of these cryptocurrencies?
Right. Understanding the technology behind it, like blockchain, can help demystify a lot of the fear. It's not just a fad. It's a new way of thinking about money and transactions.
And I like that idea of viewing it as a new tool, rather than just a gamble. It's about being informed and making choices that align with your goals.
Exactly. And for many, it's about finding that balance between traditional investing and exploring new avenues like crypto. It can be both exciting and scary at the same time.
Yeah, and, with the recent rise of digital assets, it feels like a shift in how we think about wealth. It's like we're redefining what it means to invest in this digital age.
Absolutely. And for those over 40, it's about keeping up with these changes while also being true to their financial strategies and values.
So true. And I think we need to emphasize that it's okay to take your time to understand it all. There's no rush, right?
Exactly. Rushing into anything usually leads to mistakes. It's about being patient and informed, and seeking advice if needed.
Well said, Alex. And I think that's a great transition into discussing some core strategies for approaching crypto investing.
Definitely, Jordan. It's all about having a plan and knowing your risk tolerance. Let's get into that.
All right, Alex, let's dive into some core strategies and rules of thumb for anyone thinking about getting into crypto. It can feel a bit overwhelming.
Yeah, absolutely. I mean, there's a lot of information out there, and it can be confusing, especially for those of us who didn't grow up with it, right?
Exactly. So what's the first thing someone should consider when they're thinking about investing in crypto?
Well, the first step is really understanding what you're getting into. I always recommend doing your homework. Just like you wouldn't invest in a company without researching it, you shouldn't jump into crypto without knowing the basics,
Right, so, what kind of basics should people be looking into?
Start with the different types of cryptocurrencies. Bitcoin is the most well-known, but there are thousands out there. Familiarize yourself with terms like altcoins, blockchain, and wallets.
Yeah, I've heard those terms tossed around. So, what's a good way to start learning?
There are tons of resources. You can check out websites like CoinMarketCap or even YouTube channels dedicated to crypto education. Just make sure the sources are reputable.
Good point. So once someone has a grasp on the basics, what's next?
Next, I would say set a budget. It's crucial to determine how much you're willing to invest and stick to that. Never invest money you can't afford to lose.
That's so important. And I think it's easy to forget that with the hype around some coins.
Exactly. And here's a rule of thumb. A common strategy is to only invest about 5 to 10% of your overall investment portfolio in crypto.
Yeah, that feels like a reasonable amount. So what about actually buying the crypto?
Well, you'll need to use an exchange, right? Some popular ones are Coinbase, Binance, or Kraken. Just make sure you choose a secure platform.
Security is key. So what should folks look for when they're picking an exchange?
Look for features like two-factor authentication, good customer service, and a solid reputation. Oh, and check the fees too. They can vary quite a bit from one exchange to another.
Yeah, those fees can sneak up on you. So after they choose an exchange, what's next?
Once you're set up on an exchange, it's time to make your first purchase. I suggest starting small, maybe just a few dollars worth to get comfortable with the process.
That's smart. So should they be checking prices all the time after they buy?
It's good to keep an eye on it, but I wouldn't recommend obsessing over daily price changes. Crypto can be really volatile, and that can create unnecessary stress.
That makes sense. So what's the strategy for holding on to the investment?
Well, many people use a strategy called HODL, which basically means holding onto your crypto for the long term, regardless of market fluctuations. It's a play on the word hold, but it kind of became a meme in the crypto community.
Haha, I love that. So patience is key then?
Exactly. You want to avoid making impulsive decisions based on short-term price movements.
And what about diversifying? Should they be looking at different types of crypto?
Definitely. Just like with traditional investments, diversification can help mitigate risk. You might consider investing in a mix of established coins like Bitcoin and Ethereum alongside smaller altcoins.
I see. And speaking of risk, how should people manage that when it comes to crypto?
That's where setting stop-loss orders can be really helpful. This automatically sells your crypto if it drops to a certain price, helping you limit your losses.
That's a great tip. So any tools you'd recommend for tracking investments?
Sure. There are apps like Blockfolio or Delta that help you track your portfolio. They can send alerts when prices change, which is really useful.
Nice! So let's talk about the emotional side of investing. It can be tough, right?
Absolutely. Emotions can drive poor decisions. It's important to stay grounded and stick to your strategy, even when the market gets turbulent.
So having a plan in place is crucial.
Yes, write down your goals and review them regularly. This helps keep you focused on the bigger picture, rather than getting swayed by the daily noise.
Great advice. And what about keeping track of taxes?
Ah, yes. Don't forget, crypto is taxable. Keep records of your transactions and consult a tax professional to understand your obligations.
That's a good reminder. So as we wrap up this section, what's the biggest common pitfall to watch out for?
One major pitfall is getting caught up in FOMO, fear of missing out. People often rush into investments because they see others making money, but that can lead to poor decisions.
Yeah, that's so true. It's better to take your time and make informed choices.
Exactly. Investing is a marathon, not a sprint.
All right, Alex, this has been super helpful. I think our listeners are going to feel a lot more prepared to dip their toes into the crypto waters.
I hope so. And remember, it's all about education, patience, and keeping your emotions in check.
Perfect. Let's transition to common pitfalls. So, Alex, we've talked a bit about what crypto is and why people are interested in it. But I think it's super important to dive into the common pitfalls, right?
Absolutely, Jordan. You know, there are a lot of mistakes people make when they first get into crypto, and they can be pretty costly.
Yeah, like, what's the first big mistake you see?
Well, one of the biggest ones is jumping in without really understanding how it works. I mean, it's so easy to get caught up in the hype. Someone hears about Bitcoin going up and just dives in without doing any research.
Right, like, they see those headlines about big gains and think, I need to get in on this.
Exactly. And then they might end up investing more than they can afford to lose. It's crucial to remember that, like any investment, crypto can be really volatile.
Yeah, I remember reading a story about someone who put their entire savings into a new coin because it was trending on social media.
Oh, wow, that's a classic example. They probably didn't realize that not all cryptocurrencies are created equal, and many of them can just vanish overnight.
Right, that's the thing, isn't it? People often think they can just follow the trends and make money.
Yeah, and another common mistake is not keeping track of their investments. You know, many people will buy a coin and then just forget about it.
Oh no, that sounds risky, especially if the market shifts.
Exactly. They might wake up one day to find it's dropped significantly. Or worse, they've been holding on to something that's just not going to recover.
So, how can someone avoid that?
Well, I always advise people to keep a portfolio tracker or some kind of record. It helps you stay informed about your investments, and you can make better decisions.
That makes sense. And I think another pitfall is not having a clear exit strategy, right?
Yes, that's a big one. A lot of folks get in, but don't think about when they'll sell or how much profit they want to take.
So they're just holding on for dear life?
Exactly. And then they end up watching their investment drop, feeling frustrated, and often panic selling at the worst time.
Yeah, I can see how that would be a tough spot to be in.
It really is. And you know, some people also fall into the trap of overtrading, thinking they can outsmart the market by buying and selling frequently.
Oh, totally. I've heard that's a fast track to losing money, right?
For sure. Trading fees can add up, and the more you trade, the more emotional you become. It's tough to stick to a plan when you're constantly reacting to market movements.
So, what should people be looking for when they're deciding if they should get into a particular coin?
Good question. I think one of the key things is to look at the project behind the coin. What problem is it solving? Does the team have a solid track record?
Right, like, is there actual utility to the coin?
Exactly. If it's just a pump and dump scheme, you might want to steer clear.
And what about red flags? Are there specific signs that people should be aware of?
Definitely. If you see a lot of overly aggressive marketing or promises of guaranteed returns, that's a huge red flag.
Yeah, I've seen ads that sound too good to be true.
And they usually are. Also, if the community around a coin feels toxic or overly secretive, that can indicate something's off.
And what about security? I've heard horror stories about people losing their crypto to hacks.
Yes, security is paramount. People often underestimate it. Using weak passwords or not enabling two-factor authentication can be a recipe for disaster.
So, what's your advice for someone who's already made some of these mistakes?
First, don't panic. Mistakes happen, and the important thing is to learn from them. Take a step back, reassess, and see where you can improve your strategy.
Like, maybe they can educate themselves more before diving back in?
Exactly. There are plenty of resources available, books, courses, even community forums that can help you understand the landscape better.
And it's all about building a solid foundation, right?
Yes. Start small, set clear goals, and don't invest more than you can afford to lose.
That sounds like a smart approach.
It really is. And one last piece of advice. Don't forget to have patience. Crypto can be a long game, and those who wait often fare better than those who chase quick wins.
Such great advice, Alex. I think that's crucial for anyone considering crypto.
Absolutely, Jordan. It's all about making informed decisions and not getting swept away by the hype.
Thanks for sharing all these insights, Alex. I think our listeners will find this super helpful.
My pleasure. I'm always here to help guide people through their financial journeys.
And with that, let's transition into our next steps.
All right, Jordan. So now that we've unpacked a lot about crypto, I think it's important to talk about what people can actually do next, right?
Absolutely, Alex. I mean, it can feel overwhelming, but there are definitely some immediate steps folks can take to start their journey in crypto.
Yeah, and I'd say the first step is to educate yourself a bit more. You know, maybe pick a couple of beginner-friendly resources.
For sure. There are some great books out there, like The Basics of Bitcoins and Blockchains by Anthony Lewis. It's really approachable, right?
Exactly. And there are also online courses, like on platforms such as Coursera or Udemy. They often have introductory courses that break down the concepts really well.
Oh, and don't forget about podcasts. There are tons of crypto-focused podcasts that can keep you updated while you're, out for a walk or cooking dinner.
Right? It's all about fitting it into your routine, so you don't feel overwhelmed.
So, once you feel a bit more informed, what's the next step?
Well, I'd recommend starting small. Maybe set up an account on a user-friendly exchange like Coinbase or Binance.
Yeah, those platforms are pretty intuitive. Just walk people through the setup process, like verifying your identity.
Exactly, and it's important to start with a small investment. I'd say, maybe consider putting in just $50 to $100 at first.
Yeah, that's a manageable amount for most folks, and it helps to ease any anxiety about jumping in too deep, right?
Definitely. And then you can explore buying a fraction of Bitcoin or Ethereum, which is a great way to dip your toes in.
Ah, and speaking of that, it's also good to keep an eye on your investments. Maybe set some alerts for price changes or news that affects your assets.
Right. That way you're staying engaged without feeling overwhelmed. And make it a habit to check in, once a week or so.
Yeah, build that routine. And I think it's important to remind everyone to not let FOMO drive decisions, right?
Absolutely. Stick to your plan and invest what you can afford to lose. It's all about managing risk.
So let's talk about tools that can help. There are some great apps out there for tracking your portfolio, like Blockfolio or Delta.
Yes, those apps are super user-friendly and can help you see how your investments are performing in real time.
And they also provide news updates, which is really handy for staying informed without getting too deep into all the noise.
Exactly. And, another tool I recommend is a crypto wallet. If you want to hold your assets securely, a hardware wallet like Ledger or Trezor is a good choice.
Oh, for sure. It's like your own little safe for your digital coins. And that's really important for security.
Yup. And don't forget about the habit of diversifying your investments. Just like with stocks, it's not wise to put all your eggs in one basket.
Right. Maybe explore some altcoins once you're comfortable, but always do your research first.
Exactly. And another tip is to follow reputable sources on social media. Twitter can be a goldmine for crypto updates if you follow the right accounts.
Yeah, just be cautious with who you're following. Look for accounts that share reliable information and not just hype.
For sure. And remember, it's okay to ask questions in online communities, like Reddit or Discord groups.
Oh, totally. Just make sure you're engaging in constructive conversations,
And don't be afraid to share your experiences, too. You might help someone else who's just starting out.
That's a great point. It can create a sense of community and support, which is always valuable.
Yeah, and as you start building these habits, it's important to keep revisiting your goals. Are they still aligned with what you want?
Right. It's all about staying flexible and adapting as you learn more. This is a journey after all.
Exactly. And I think a good practice is to set some milestones for yourself. Maybe after a few months, revisit what you've learned and how your investments are doing.
Yes, that reflection can help you feel more confident in your choices and adjust your strategy if needed.
And finally, I'd say enjoy the process. It should be about growth and learning, not just numbers on a screen.
Oh, absolutely. And as you get more comfortable, you'll find your own rhythm and what works best for you.
Well, I think that wraps up some solid next steps for our listeners. It's all about taking that first step and then building from there.
Totally. And remember, everyone, you don't have to rush into anything. Take your time and make informed decisions.
Right. And as you explore crypto, keep in mind that the landscape is always changing, so staying informed is key.
Thanks for sharing your insights, Alex. And to our listeners, we hope you feel inspired to take those next steps.
Absolutely. It's an exciting journey ahead, and we're here to support you along the way.
So let's transition to our outro. Thanks for tuning in to Prime Wealth. Wow, Alex, I think we really covered a lot today about crypto, right?
Yeah, we did. It's such a fascinating topic, and definitely one that's growing in interest, especially for folks over 40.
Absolutely. So let's recap some of the key takeaways for everyone listening. First off, it's important to really understand what cryptocurrency is and how it works before diving in.
For sure. And, the second takeaway would be to only invest what you can afford to lose. That's a big one, right?
Totally. Don't put all your eggs in one basket. And then we talked about the volatility of crypto. It can go up and down really quickly. So being prepared for that is crucial.
Exactly. And I think we also emphasized the importance of doing your own research, right? Don't just follow the hype.
Right. Yeah. It's all about being informed and making decisions that are right for you.
And I'd say the last takeaway is to consider your long-term financial goals. Crypto might not be for everyone, but it can be a part of a diversified portfolio, if you're careful.
Well said, Alex. And for everyone listening, remember that your financial journey is unique to you. So stay positive and keep pushing forward.
Yeah, and if you found this episode helpful, please like, subscribe, and share your thoughts in the comments. And if you know someone over 40 who might benefit from this discussion, please share it with them.
Definitely. Oh, and don't forget to tune in next time. We'll be diving into value versus growth investing, pros and cons.
That should be an interesting one.
Yeah. So until next time, take care, everyone.
Bye for now.
Bye.